please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
BTST time, Ashwani and Rajat with us for that. Ashwani, you go first. Thoughts on the index? Are you tempted to reverse that long stance? I mean, you just said that you've taken short positions in Bank Nifty, but would you be advising clients to carry forward? And what would be the individual stock calls?
See, the shorts we have covered because, today is the first day. I mean, sometimes things look bad and, then there is no follow through. So let's not go till that path. But it's clear that today, stocks like Britannia, Jubilant, IT, so there's been an across the board kind of, profit booking. But as long as 10,600 holds on, the idea should be to buy into the market. Similarly, on Bank Nifty, I think 25,500 thereabouts seems to be some support. Again, idea should be to buy. For the next hour or so of trading till tomorrow, Century Textile is a sell with a stop of 1180, target of 1120. Today, PSU banks have had a fairly strong sell-off. That's Orient Bank is a sell with a stop of 92, target of 84. And EIH is a buy with a stop of 180, target of 195. And like I've been saying since morning, that I'll be interested to see whether this PSU sell-off and corporate bank sell-off continues and money keeps moving into those other banks, because the Bank Nifty hasn't fallen overall, but within that, I think enough banks are down 3 and 4%.
Oh yes, PSU Bank Nifty is in fact down quite a bit. So Oriental Bank is the one that Ashwani has chosen. But if you see that one, that's of course not the Nifty Bank, the Nifty PSU Bank should come up for you. That's OBC, of course, down about 5%. But there are others as well where we're seeing decline. The PSU Bank Index, in fact, is down almost 2.7% now. Here, Ashwani, Indian Bank is now down about almost 5%. Others as well. So you reckon a fresh round of decline could have started here?
See, that seems to be the sense, because this time the PSU Bank rally didn't even last 2 days, and already we are almost at recent lows. So that way, I think people are now giving up on these stocks and moving into better quality stocks. So HDFC, Kotak, maybe even Axis Bank, these are the stocks which are attracting buying.
Okay, all right. By the way, that news that finally came through, it was much anticipated for the sugar sector. It really hasn't inspired any confidence in sugar stocks. That's a very weak part of the market as well. Rajat, let's get your trades in. What are you working with for end of day today and tomorrow?
I've actually chosen 2 stocks, out of which one is a buy and one is a sell. ITC looks to me can still be bought. Stop loss below 277 in May futures. Targets will be 286 and 291. And DHFL, I consider that its uptrend is already over, because it's a wide-ranging day and the stock is hovering within the midpoint of the range. So this suggests that already the directionality is already through on the upside. So chances are that now it will settle for lower levels. 641 and 632 are the 2 targets for May futures, and 671 is my stop loss. So DHFL is a sell, ITC is a buy.
Okay, fair enough. Well, the selling continues in the mid-cap market. Lots of names. IRB Infra at the lows of the day, 5% down. And the stock quality, 6% down. And the last couple of minutes itself, Anuj, they've been so erratic on something like quality. Anyway, it's at a 52-week low, that stock. And I mean, what sense do you make of this sort of mid-cap mess that seems to play out today?
There's an interesting sort of dichotomy here. Every time the Nifty and the Bank Nifty are falling, some of the stronger stocks are seeing buying. The HDFC twins are seeing buying on declines. And on the other hand, the names you mentioned, Quality, for example, or the likes of PC Jewelers or whatever. I think that today is once again a reminder that perhaps this is a year in which don't get into mess. Stick to the quality stocks. Perhaps don't even look any further than the Nifty Junior. Because things like this will happen. And today, even high quality stocks have been punished if they've not delivered numbers. That's also a thing. You know, Marico, for example, there's a sharp punishment that you've seen from Marico. Intraday, I think from the highs, it's down about 8%. So in this earnings season, we had the first few numbers which were good, and now if you don't meet expectations or beat expectations, this kind of move can also happen. Having said all of that, so the Sensex is still in the green. Okay, and the Nifty is down only 24 points after a big one-way rally that we've seen from 10,000 to 10,715. I think today has been a bit of a market's move to tell you to, if you were getting too cocky about getting into mid-caps again, perhaps to, just get out of that.
I guess just a reminder that we're in the kind of market where momentum can turn on a dime. It can work for you, and it can completely cut you out in a matter of just hours, if not days, if you happen to be with the wrong set of stocks. Anyway, Anand is still with us. Anand, I don't know if you track Century Textiles, if at all. A word on that stock. Otherwise, any interesting idea that's crossed your mind last couple of days that you'd like to leave us with?
Well, Century is not on my list, so I would refrain from commenting on that. But generally, if you look at some of the other textile companies, for example, Arvind, they have also eased off today. If you look at it, it's fallen off quite a bit. So it does look like it's not necessarily only Century. Maybe it is taking the brunt of it. There are several companies in my mind which, if you have to take a slightly longer term view, where you could actually be looking at investing, and I think I mentioned this last time as well, that I think trade related area is one area where there has been a significant fall in the stock prices, perhaps not commensurate, as we saw, for example, with Container Corp, where the numbers were not as bad as perhaps the market was beginning to look at. So that is one area that I find the valuations have become quite attractive. Companies which are in the business of CFS, ports and so on are actually now trading quite cheap. And otherwise, of course, there are incidental, one-off companies where I think the results can be quite interesting. And in particular, I'm looking at credit rating agencies, for example, as one such sector.
Okay, Anand, we'll let you go on that note. Thanks a lot for your time today. This is turning out to be a bit of a volatile session, quite a volatile session actually, and there are a lot of stocks where we have seen really volatile moves. Just take a look at a stock like Ujjivan. Just pull out the intraday chart of Ujjivan for me, please, and see that stock. Earlier you were talking about that big rally in Equitas. Now, just look at this chart. It's a nightmare if you are a day trader, and of course if you're an investor, you would say, what happened? Nothing happened there. 1.7% higher. Just look at that move from the highs, massive move down from 418 to 403, and now recovering all the way back to the high point of the day is 417 is what we have on this. It's been really violent today as far as some of these stocks are concerned. But Jay Bala is also with us from cashthechaos.com. Jay, hi. Good afternoon. Quite a bit of chaos today in the mid-cap side. But overall thoughts on the index? You reckon the uptrend is well and truly intact?
Yeah, see, there are two possibilities at this point of time. My interpretation is that the markets are going to have a shallow correction. I was expecting correction somewhere in the region of, the correction to start somewhere in the region of 10,800 to 10,825. And we have seen a high of 10,785, which is close enough. So be prepared for a shallow correction. And my interpretation of the charts is that it's unlikely to fall below 10,500. But I'm not saying it has to come to 10,500. It can be even shallower than that. But give some additional allowance for the market to correct. But once that is done, I think the market is heading for further record highs, and it'll take out the January highs probably sometime like in July or August, like I said in my last interaction with you.
So remember that you did say that the market has made a bottom, and yes, since then we've got a 600-point rally on the Nifty, Jay. But if we talk about this shallow correction, what looks most vulnerable, or what will lead it? Is it banks, or do you think IT will go through its profit booking?
I think it will be across the board, but banks, as I said last time, we got to segregate them into stocks that will make record highs and stocks that are likely to see the correction to the down move. And as expected, the private banks like S Bank, Kotak Bank, HDFC, they are all doing pretty well. They are in line with expectations. And as far as IT goes, I think they haven't seen the final highs. They will undergo a correction, but the rally is going to percolate into the next quality stocks. Within the second rung space. We still have big upsides in Ramco Systems, Nucleus Software. The strength that we have seen in the frontline names at the first rung of the mid-cap that's going to percolate further into the second-rank stocks like Nucleus and Ramphosys. And Nucleus is still a three-bagger for me. And IT, as I said, it's likely to, the index is likely to do something like 14,800. But the gains that you're going to see from the frontline names are going to get slightly less, and it's going to go to the next level IT stocks.
Okay, next level IT stocks. By the way, HDFC twins really putting their hands up for now. Both these stocks have moved to high point of the day, HDFC and HDFC Bank. Just see the intraday chart of these two stocks. It's almost as if nothing mattered to both of these intraday. What's happening with the overall volatility? Both making highs of the day. The other stock which is interesting is CEAT. Just pull out the intraday chart of CEAT. That stock, after opening higher, is now in fact making lows of the day. Just see the intraday chart of that stock. CEAT, in fact, now almost in the red. Let me see if that's also the case with Apollo Tyres and MRF as well. Today, of course, the rubber prices have also gone up, and just see Apollo Tyres intraday. Okay, that one also in the red now.
Down.
Yes, and MRF also slipping almost to the low point. So this is a bit of a sectoral move that you've seen at this point in time. So Jay, we've discussed IT. You reckon similar move could happen in pharma?
Pharma, okay. Yeah, pharma is still, I'm still bullish on pharma. I like Glenmark Pharma within the pharmaceutical space. And Glenmark is a three-bagger for me. There's something positive that's sprouting in the pharma space. But there are, the most bullish for me is Biocon, and then Glenmark Pharma. Biocon is the strongest at this point of time, but Glenmark, I think it's got tremendous upside potential. But it's not the entire sector that's going to pick up steam. We're going to see pockets of strength within the pharma space, and since Glenmark has a huge upside potential and a low risk reward, so that's my top pick at this point of time.
So going back to the original thesis, Jay, since you're seeing fresh highs for this market as early as August, July, August, where is the momentum going to come from? Do you see that in Reliance? Do you see that in any specific bank stock?
Yeah, as I said, Reliance is going to be the next $100 billion company. It was always a neck-and-neck race between TCS and Reliance. And Reliance, I've been quite bullish on it for the last 1.5 years, and it's still got upsides pending. It must do something close to 1150 to 1200. So that's the kind of price objective I have for Reliance. So I think that will drive the rest of the rally. And consumption space hasn't done its rally. It's still got some more upsides to come through. And today I've got two picks within the consumption space. One is Stell Holdings, which is a holding company for Harrison Malayalam, and also Godfrey Films. Stell Holdings is looking pretty good at this point of time, and it's likely to scale somewhere close to 165, 170 from current levels, and it's unlikely to fall below 105. Godfrey Phillips, is something that's looking pretty interesting. That's likely to be a doubler at least. There's even potential for it to go somewhere to 2,700. But be conservative and look for 2,700. Right from the time Nifty was 6825, I said the top picks within the index was actually Reliance, Britannia, and HUL. They've all been drying. If you look at even last time I had said, look at the MNC index. There they're likely to make multi-year highs. And if we saw, even Britannia, HUL, they are all clocking record highs. Even Nestle, each day. But they are doing it in a unnoticeable fashion. They're not big moves, but at the same time, they are contributing in a way to the Nifty.
Okay, Jay, we'll leave it there today. Thanks a lot for your time today. So that's a lot of stocks that Jay Bala was referring to. By the way, look at the stock making low of the day today. Two stocks. One is Maruti and one is Tata Motors. And it's important because on Maruti now we are approaching, I think if we are not already there, the result day low. 8756, and today you have Maruti with all-time high sales numbers, and from the high point that's actually slipped quite a bit. And the other is Tata Motors. There also, of course, the domestic sales.
So the fall has stalled. If you want to be a bit of an optimist, you can say that at least just a 1.5% decline right now in the index. That's the mid-cap index, and the Nifty as Anuj, you're pointing out, it's not all lost because some of those names like the HDFC twins are still seeing some kind of traction.
Oh yes, intraday were down 50 points and now it's recovered, Surabhi. So that buy on dips has worked out. Today's been a bit of a warning, though. Make no mistake about the mid caps. I think leverage positions in particular in some of these F&O names. A lot of these stocks are ending with, I mean, of course, they've recovered, but they are ending with about 8-10% cuts like Just Dial, Century Textiles, Repco Home, Jet Airways, 7.5%, Sale, etc. So a bit of a warning sign for sure.
Yeah, absolutely. Okay, by the way, do watch out for the bounce on Infosys, Yes Bank. These are some of the nifty big boys that are trying to pull things up. Let's get an insight into what the dealers have had to say about today's volatile session. We have Nimesh joining in with all the action. Nimesh, what have you been picking up?
I should be. So, a big sell-off in the mid-cap and small-cap, and as what Anuj pointed out, it's the leverage positions which are getting squared off in the F&O. I guess to some extent it's also because of the way, stocks like, PC Jewelers and all have fallen so much that now there is a scare of a bit of leverage in the mid-cap space as well. So, that's something which is playing out. No specific reason for a specific fall in the mid-cap and small-cap. I guess it's largely profit booking after the big run-up that we saw, since the lows. So clearly, today's a day of mid-cap profit booking, which is clearly playing out. In terms of flows, it's still mixed, but I believe there is one big basket selling by a large, long-only fund from the US. So we need to see as to what the final FI number is. That may be a bit negative in today's trade in the cash market. So that's going to be very clear. I guess for this particular series, the state election outcome from Karnataka will be very critical for the market move from here on. And in which ways, from a tactical point of view, we were at the higher end of that range. So maybe, that's also playing out in terms of some bit of profit booking. So clearly a day of profit booking in mid-cap and small-cap, a bit of scare given that some of the stocks have fallen so sharply in the F&O space. But it looks like it's not largely institutional driven, but largely, action more on the HNI and the retail desk.
Okay, Nimesh, thanks a lot for that. Before I invite Sudip, I just wanted quick thoughts from Ashwani on a couple of stocks. NIIT Tech, Ashwani, and also Vedanta. Okay, I think we are having some problem with that link of Ashwani. We'll get that. Sudip, good afternoon. Thoughts on the mid-cap side of the market today? The index is down 300 points and advanced decline 2.5 thereabout, and a lot of stocks down 7 to 8%. Just a random move, you reckon, or is there a bit of a message here?
Well, I think, Anuj, there is a message there. A lot of these mid-caps, if you start taking one by one, there are particular reasons for nervousness amongst the investors and the traders in those counters. Look at Just Dial. I think the rally, what Just Dial did see was on the back of an expectation of some M&A transaction. Somehow that's not, kind of actualized, and there is a bit of nervousness. Look at Jet Airways, Indigo, and, airline stocks. Bit of a nervousness because aviation fuel prices are going up. Fuel prices globally are under pressure, and there is a bit of a concern. Load factors are also high, but the prices haven't gone up in the summer season, so bit of a concern. Most of these stocks, I would say, in the mid cap, where to an extent the investors were leveraged. They were leveraged positions, and whenever there is a bit of a concern on the markets, I think these gets liquidated, and that's pretty much what is happening. Fundamentally, I don't see any major reason for a worry as far as the markets overall are concerned, and we have seen that getting played out at lower levels. Buying is coming, but the buying is probably getting more concentrated on large caps now.
Okay, fair enough. By the way, lots of stocks on the move. EIH, which was Ashwani's call at 2:30, that stock surged about 8%. And there's a lot more buying on Ujjivan now. Ujjivan is at the high of the day. Equitas anyway had been doing well. So some of these MFI plays continue to be tracked quite smartly today. So there you go, Ujjivan sharp rally in the last 20 odd minutes. Sudeep, let's talk about the metals side of the market, because it had a great run, somewhere in the middle of last month. And today the correction is very savage. It's across the board, ferrous, non-ferrous, whether it's Tata Steel, SAIL, Vedanta, Hindalco. Is this a buying opportunity?
Well, to an extent, I believe that it is a buying opportunity. I think globally, the rally in metals which we have seen, I think there's still some legs. It's, probably it'll run for some more time. And, the correction we have seen maybe to an extent a buying opportunity for a slightly long-term investor. Having said that, I think the run-up we have seen in aluminium and alumina, probably that kind of run-up we will not see in the near future. There was a problem with the supply post-US sanctions on Rusal, but that's probably going to be removed with whatever the recent developments there. And with that, the aluminium supply at least will be restored. About 6% of global supply, that's significant. With restoration of that, it will be only a linear progression in aluminium and alumina prices based on demand, but the abnormal situation emanating out of US sanction will not be there. So be a little careful on aluminium and alumina. It may not continue to run up the way it was, but overall the metal demand scenario is good. And a stock like Vedanta, I think we were talking about it some time back, is a good buy even at current levels.
Okay. Ashwani, I wanted your thoughts on a couple of these names which are ending at low point. A, NIIT Tech, and B, what have you made of Maruti's reaction today to what looked like a real, good set of news?
Well, when stocks react poorly to good news, that means that probably it's in the price and they need to fall more. Maybe autos now are not responding to good numbers. So that way, 3-4 year rally, possibly getting into a consolidation. But overall, I think the IT space remains in an upside. We had vertical rallies. So, with that sort of rally, I think giving back 5 to 10% even should not be a surprise. But at lower levels, you should try to get into IT.
Okay, well, we've just got about a minute to go before this day closes out. So, Anuj, how would you qualify this bit of a mid-cap shake-up that we've got today?
Yeah, if we didn't have the intraday chart and if you had looked at the market today, you would have said it was quite an okay day. But in between, I think there were 2 or 3 lessons. A, the good quality stocks like the HDFC Twins, I think TCS, they are seeing buying at lower level, Infosys. And there's a bit of a problem with some leverage positions. I think, as Nimesh was also mentioning, perhaps it's a PCJ fallout or whatever. So that is one area where perhaps you got to be a bit cautious about in the mid-cap basket. But overall, quite a decent day in terms of index. Of course, Sensex is ending in green, Nifty is ending in red. That's been the kind of move that we've seen. But let me start with losers first. On the Nifty, Vedanta, Hindalco, Tata Steel. So middle pack was down. HCL Tech was down 4.5%, so big weakness on that stock post the numbers. Then a couple of banks were down, ICICI, Yes Bank, and in fact you may want to add SBI as well. So these were a few stocks which were down. Lever, by the way, fell quite a bit in today's trade. Despite all of this, the market's losses were capped because HDFC Twins did well, ITC was up about 1.8%, Kotak was up 4%, and Reliance was up 1%. So there were some gainers as well, which sort of protected the market today. But this was large cap. The talking point today was mid caps, of course.
It's been all over the place and lots of red on the screen even as we are closing out. So we've got casualties like Century Textiles down about 9.5%. You've got stocks like Quality losing about 6%. A lot of the metal stocks beyond the Nifty 50 have been weak, whether it's JSPL, SAIL, Hindustan Zinc. That entire club of metal stocks has been down and out today. Marico, look at the severe reaction to numbers. 5% down to Marico. There was a miss at the operating level as well, about a 1% miss on the margin, and the market was in no mood to forgive. Let's pull up Kansai Nerolac as well as close, at the final rate at close, because again there's a bit of a margin issue because of crude prices moving higher. That stock still managed about a 3% up move for itself. Big stocks like Jet Airways falling 8%, NIIT Tech falling about 5%. Then, of course, the entire clutch of PSU banks was quite weak today. So, Indian Bank, OBC, Canara Bank, your entire mid-cap names down between 4 to 5%, depending on which stock you are picking up. Sugar was a very weak space. So, Balrampur Chini is losing about 5.5%. Dhampur is also down. The announcement on cane pricing really is of no help to these stocks, at least not right now. IRB losing about 4.5% as well. Gati losing about 4%. Lots of stocks on the weak side of the screen. Just Dial 7-8% down. And of course, the prize once again goes to PC Jewelers. Guess what? In terms of the maximum cut today, 23%, almost 24% shaved off once again on a day like today. On the upside, there were a couple of very interesting plays on the MFI side of the market. So Equitas, for instance, 6% up. You had a lot of buying on Ujjivan continue as well. And Cyient was rock solid, though its other peers like NIIT Tech, like I just outlined, were weak. But Cyient kept up with the 6% up move for itself. Fortis Healthcare, with so many bidders in the fray and prices increasing by the day, 4% up there. Lemon Tree Hotels managed a bit of an up move as well. Godrej was still positive as we closed out, 2.5% up. ICICI Pro, which has been a great number this season in terms of earnings, that stock saw some more buying come through. But otherwise, Anuj, as you're saying, I guess it's a reminder, stick to where earnings are good, stick to where companies are performing well. Otherwise, you might just get rogered out, right?
Oh, yes, that for sure. Sort of the quality of stocks, perhaps, after this big rally. But let's take final thoughts from our guests then. So, Ashwani, for now, the texture of buy the dip still intact?
See, about mid caps, it's important to understand that last year we had a rate cutting environment, and that adds fuel to the mid caps. This time that booster is not available, and the mid cap index is underperforming the Nifty. So as we are getting towards the previous high, the mid caps may start to drop off this rally. So my sense is the last 200 points may be driven by more large cap than mid cap. So try to save the large caps overall and don't get into smaller stocks.
Okay. Sudeep, any thoughts, particularly on the FMCG and consumption side of the market? I mean, how did you read the sort of numbers we got from Dabur? And the reaction to Marico has been very severe today.
Well, I think, you have to demarcate between Dabur and Marico. Marico depends to a great extent on copra, the raw material, where the prices had gone up by about 50%. So Marico, we were not expecting great results from Marico. Margins were supposed to be under pressure. And I think market did give a subdued reaction to the Marico numbers. Overall, FMCG, if you ask me, I think we have been bullish on ITC for some time. There is a strong rationale behind ITC prices going up. And, if you compare ITC with a Hindustan Lever or even other multinational FMCG companies, the PE multiples in ITC is much more attractive. Of course, there was an issue with the FMCG business of ITC, but it's believed that, they are close to break even or they'll start making money from this quarter itself. So I think that's an excellent news. Tobacco keeps on making money. So I think the time for ITC to catch up on multiples have come. So, FMCG stock, ITC is our favorite. If you go outside the universe of, these some of the more traded FMCGs, you can look at the multinational stocks like Colgate or Nestle. I think both are good buys, even at current level, in spite of the elevated, PE multiple levels.
Okay, all right, gentlemen. Exclusive conversation with CNBC TV18's Yash Jain. Claudio Fashion, the president of Power Grid division at ABB, says that they are investing approximately $100 million per year in India. He adds that investments in the country will go towards developing and supporting innovation.
The contribution of the power grids part of the business it's really important for India, but not only for India. For us as ABB, this is a global hub. We use the competence that we have in this country to deliver technology, to deliver engineering services across the globe.
Right.
We have been building up this footprint over the years. We actually are doubling, as we speak, our capacity in Chennai on delivering engineering services on global scale. Okay. We started a few years back, and now we're reaching close to 1,000 engineers that are dedicated to provide technology like microgrids, but also supporting HVDC, high complex systems across the globe. Digitalization is another important area that we're really focusing on. We see a lot happening globally, and India, it's a perfect place for us to develop that technology, not only because there is a fantastic pool of resources with all the engineering capacity that comes out every year out of the country, but also the ecosystem where there is a lot of investment going into digital, and that's a perfect place for us to leverage that and then expand that capacity, leverage it to grow opportunities in India and make the grid part of it even a more relevant part going forward, but again, not just for India, but for global purposes.
And to support the strong expansion which you just mentioned, what is the kind of investment which ABB has earmarked to put in ABB India for the next 3 to 5 years?
On average, we've been investing about $100 million every year in India as ABB, and we definitely continue down that path. And those investments are not only for India as such, but as I mentioned before, it's very important that we continue to leverage what we have been building so far in India for developing and supporting innovation and technology advancement across the globe.
Okay, that's ABB and their plans in India. Moving on, soon Jawans and their families can perhaps use e-wallets to make payments at the defense canteens. We learned from sources that canteen stores department, which makes up to 5 to 7% of the FMCG industry's sales as a whole, is now in talks with marquee payment gateway companies to accept payments through these platforms. Priya has more details on this one. So it's what, Paytm your way into, you know, the CSD stores?
Absolutely. In fact, what we do understand from our sources is that even as the CSD adopts to more digitization as well as automation, we do understand that they're looking at more convenience in payment options. We do understand that Paytm, Airtel Money as well as MobiKwik have approached the CSD to offer and enable payments through their platforms. Now, this essentially means that at this point in time, the CSD has 3 options of payments. These include cash, credit and debit card, as well as the Bheem UPI option that they have introduced recently. So what wallet companies are offering the CSD at this point in time is a zero commission based structure, free transactions for the CSD to begin with, but we do understand that later on wallet companies may look at introducing a transaction fee for transactions going forward. But of course this could perhaps mean a big business for payment companies, considering that the CSD clocked a turnover of about 18,000 crore rupees in FY18. But of course, the CSD will need a nod from the Defence Ministry before they can give any approvals to any of these private players. We did reach out to the company. CSD said that it is an evolving scenario and they will wait for government policy surrounding the acceptance of private portals. Paytm, MobiKwik as well as Airtel Money did not respond to our query.
Commodities now, where sugar clearly seems to be buzzing into the Indian markets here. We did see the prices gain up on the higher side, and then of course after that knee-jerk reaction, we've seen the sugar prices and the sugar stocks as well end on a slightly lower note. It really is the calculation or the maths that the markets are making right now. We have 55 rupees per ton of a subsidy on the sugar cane, and that really comes in at if you do the total maths, that just about comes in to 1,500 to 1,600 crores. And when you look at the arrears that are due to the cane farmers, that stands at a tall 20,000 crores. So that mismatch, or just a fraction of that number as a subsidy, is something that the markets clearly did not like. But Carlos Mera Arzena, who's senior commodity analyst at Rabobank, now joins us on a phone line to talk more sense on that. Carlos, hi, good to have you. Well, it's not just the Indian markets which are suffering the low sugar prices. World around, it's the same case. But with the kind of subsidy, production-linked subsidy that we have seen in the Indian markets also falls short. Have you had the time to read that? What is your sense on that then?
Well, certainly the subsidies on sugar cane in India is a bearish factor that we learned about overnight this morning here in Europe. It did pressure the market down. It came probably sooner than expected. There had to be some solution to the situation in India. But yeah, the market is down. It's down over 1% today. It was 2% down at some point. But more generally, I mean, the global story is actually quite bearish for sugar, because we have a glut of sugar. We have a big surplus in the world in the 17-18 season, in the 18-19 season as well, with some forecasters expecting more than 10 million ton surplus for each of the seasons. We are a little bit lower. We had 4.5 million ton surplus for the 17-18 season, 7.9 for the 17-18 season, 4.5 for the 18-19 season. So it's a lot of sugar in the world, and we don't see any supply side response to that. Only very little. Only in Brazil, with switching from producing sugar to producing more ethanol. But that's tough. So we still a lot of sugar coming online.
So, Carlos, what is your sense? What supply side response would you expect? Because this is perhaps the second straight year when we are looking at the sugar prices continuing weaker. Even then, the output, not just from India, but Thailand, European Union, Brazil, everywhere has been on the higher side. We do speak to some Indian farmers, and they say that where they are used to, producing cane, and on the other side, there's nothing else that they would really know to do as well. So, would you say that the farmers in most countries really are stuck like that?
Yeah, we see the same situation in more than one region. In the northern countries, for example, when our farmers have to choose between sugar beet or wheat, for example, wheat prices are good either. So there's no, we don't expect too much switching away from sugar because other commodities are not paying enough. And particularly in the EU, we have the planting figures only 1% down year on year, despite the drop in sugar prices. So this, we just see a lot of sugar still coming from different corners of the world, and this is a very bearish argument, and it's a very structural argument. So I don't expect any recovery of sugar prices in the short term.
So what is your sense, Carlos? How much of a decline in prices would you expect from here on in sense of sugar?
Well, it depends a little bit on the weather. I think sugar prices are likely to continue on a downtrend until there is a weather issue. And the next weather issue I can see is probably in Brazil. Brazilian fields have been quite dry.
But Carlos, would that be another 5–10% of a downside from here? What are you estimating?
Well, if the weather issues in Brazil turn out not to be a problem, and if China doesn't surprise to the market importing more, I think we could be going to 10 cents. 15% drop.
Okay. Well, that's a bearish outlook coming in from Rabobank. Carlos, thank you so much for joining us with that sense. Well, as he was saying that the global outlook for sugar prices is bearish and 10% of a downside from these current levels is not ruled out. But earlier, CNBC TV18's Archana Shukla also caught up. She's traveling Karnataka, and she caught up with a farm leader in Belgaum, and this is what he had to say on reaction to the subsidy that has been passed in by the government on cane today.
FRP is fixed on the recovery basis, no? That comes to about 2,800 and 900. The government is proposing to give 55 rupees per ton. That prevailing price of the sugar is 2,500. It comes to about 2,555. There is no big difference. Nothing happens. Because paying 2,900 rupees is the obligation of the sugar factories. But we are getting only 2,500 rupees. The government pays subsidy of 55 rupees. What happens? Nothing. No big difference is there.
So in your assessment, the government is saying that this will help the companies also repay some more amount to the farmers, because overall about 20,000 crore rupees of arrears are still pending. Yeah. So what in your assessment could be the way then?
No, nothing. See, there is gap between the prevailing market price of the sugar and the FRP. There is gap of 400 to 500 rupees. If the government pays 400 to 500 rupees subsidy, then it works out.
Well, that clearly is the view coming in from the farms as well to reaction to that subsidy that the government has come out with. Clearly more needs to be done, and we have seen that little impact come in for that space there. But Fayaz Udani as well joins us in the studios now to talk more about sugar and other commodities. Fayaz, hi. First reaction on what's happened in sugar today.
Well, the announcement, or rather don't think so the announcement will make a much bigger difference from a longer term perspective, the near term sentiments or the near term mood which we have already seen in prices. But as the gentleman rightly highlighted, on a broader perspective, I don't think so there would be any drastic change for the announcement.
Been a day when we have seen buying come back in many of those global commodities. So whether it's energy, gold and silver or base metal prices, all of that started positive in Asia, and that's how we are continuing right now. Fayaz, what is your sense if we start with energy? Yesterday was a bad day. We saw nearly 2% and a 2-week lows coming in for that. Are you buying these levels?
Well, I think till now also the trend is not yet weak. To talk about the trend, till the point of time the market is between 66.5 and 68.5 for WTI crude oil. It continues to be sideways. If I talk about the Indian markets, till the point of time 4440 is holding. I still feel that the trend is still bullish. We might see a correction, but till the point of time we don't see the immediate support levels being broken. We really cannot be bearish on crude oil. Saying that, for the session, I feel that the May futures is a good buy at around 44.60 for a target of around 45.80, and a stop loss should be recommended of 43.99 for this strategy.
How are you looking at the precious metal space? Because quite a decline is what we've seen there. Do you think the stability can lead to some buying again?
Well, we have seen a good correction in the international market, and probably 1290 or 1290 seems to be on the cards. But to talk about the domestic market, the rupee would be the supporting factor in the domestic market. And if I talk about levels, 31,000 is a psychological level. I think the market should come below that, but it should hold around 30,800 odd levels. So from that perspective, any correction is a good opportunity to buy. From a near-term perspective, 30,850 is a good level to buy the MCX June futures for a target of around 31,100. The strategy for this, the stop loss for this strategy would be around 30,699.
And anything that you're picking up in the metal space today, because we have seen the steel, iron ore, nickel prices surge quite a bit today.
Well, yes, we feel that nickel and copper both are looking good from a near-term perspective. The inventory of both the commodities have declined globally, and nickel till the point of time is holding the 920 levels, which it has been holding for last couple of weeks. It seems to be trading in a range, and it seems to be giving us a good call at around 920, 922. To go along at this levels for a target of around 940. The stop loss can be maintained of around 910. To talk about copper, I think the June futures on MCX, those are good buys at around 453, 452 for a target of around 458. The stop loss should be maintained of around 450.4.